Reviewing these accounting errors and correcting entry questions can help you pass your next accounting test. I'm Scott Meister, and this is Test Prep Episode 8. In this video, we'll take a look at some financial accounting questions related to accounting errors and correcting journal entries. This video is meant for students in their first accounting class, and if you want to see more videos like this, make sure you subscribe to my channel and ring the bell to be notified when new videos come out. Also, if you know anyone that might benefit from this video, make sure you share it with them. Alright, for the first question it says, when a recording error exists, it should be corrected during the closing process at the end of the period, corrected during the adjusting process at the end of the period, corrected upon discovery, or corrected at the end of the period. So whenever a recording error exists, you want to correct it upon discovery. So the answer here is going to be C. And from a practical standpoint, this makes sense because if you were to discover an error, let's say on the first day of the accounting period, so let's say it's the first day of the month, then you would have to remember that and document it somehow, some way, then remember to record that correcting entry at the end of the period or at the end of the month in the example I'm giving. So, when I look at A, it says at the end of the period. When I look at B, it says end of the period. And when I look at D, it says end of the period. So it's just not really practical. So that's kind of another way that you might be able to solve a question like this. For question 2, it says, correcting journal entries must have at least one balance sheet account, must have at least one income statement account, always include at least one debit and one credit, or is another name for adjusting entries. Well, it can have more than one balance sheet account, so that's not it. It can have more than one income statement account, so that's not it. And it isn't another name for adjusting entries, so by default, then the answer is going to be C. But also, when you look at C, that's a very fundamental concept in accounting, is that whenever you have a journal entry, it's going to have at least one debit and one credit. So the answer here is going to be C. For question 3, it says, Smithco received a check for $780 from a customer on account for services performed. The bookkeeper for Smithco recorded the transaction as a debit to cash for $870 and a credit to accounts receivable for $870. The correcting entry for this transaction is debit cash $90 and credit accounts receivable $90, debit accounts receivable $90 and credit cash $90, debit accounts receivable $90 and credit service revenue $90, or debit service revenue $90 and credit accounts receivable $90. So anytime I see correcting entry questions like this, I use T accounts. So I'm going to create the T accounts for what the bookkeeper did. So I've got a debit to cash for $870. And then I've got a credit to accounts receivable for the same amount, that $870. So I've got accounts receivable, $870. Now what I'm going to do is I'm going to take a look at the first sentence where they tell us what actually happened. And this is going to tell me what we should have done. And what this represents then is I'm going to put this number in as the ending balance on my T accounts. So when I look here, it says that we received a check for $780. Well, when we receive money for $780, that is going to be a debit to cash because cash is an asset. We increase the balance of cash by debiting it. So that means that my ending balance for this transaction for cash should be $780. So I'm going to go ahead and put in $780 on the debit side for cash. Next, I know that it's from a customer and then it's on account, so that's going to affect our accounts receivable account. We decrease the balance of accounts receivable, which is an asset account, by crediting it. So my ending balance for accounts receivable in this transaction should be $780, and that's a credit. Next, what I need to do is figure out with cash, how do I go from a debit of $870 to a debit of $780? Well, I need to take $870 and reduce it by $780. And when I do that, that's $90, and that is going to be the amount that I need to credit cash. So $870 debit less credit of $90 gives me $870 ending balance debit. So that's the thought process there. I'm going to apply the same approach to my accounts receivable. So I had $870 less the $780, that's $90, and I know that I need to debit accounts receivable $90. So a credit of $870 less a debit of $90 leaves me with an ending balance that's a credit of $780. So the answer here is going to be B, because we need to debit accounts receivable $90 and credit cash $90. For question 4, it says, Craftco issued a check for $980 to a vendor for supplies purchased on account. The bookkeeper for Craftco recorded the transaction as a debit to accounts payable for $890 and a credit to cash for $890. The correcting entry for this transaction is debit accounts payable 90 and credit supplies 90, debit supplies 90 and credit accounts payable 90, debit cash 90 and credit accounts payable 90, or debit accounts payable 90 and credit cash 90. Just like before, I'm going to go ahead and do T accounts. And these T accounts are going to be for what was actually recorded. So I've got a debit to accounts payable for $890. So I've got accounts payable, that's a debit, and that's $890. And I've got a credit to cash for the same amount. And then I'm going to take a look at that first sentence to see what actually happened. And that's where we issued a check for $980. So when we issue a check, that means that we are going to credit cash. Cash is an asset. We decrease the balance of our cash by crediting it. So I've got $980. And then for supplies purchased on account. So on account is my indicator here that should be accounts payable. And when we pay off accounts payable, we are going to debit that balance. And we debit it because we're decreasing the amount that we owe. So the ending balance of accounts payable for this transaction should be $980. And then what we need to do here is we need to figure out for accounts payable, how do we get from $890 debit to $980? And that's where we're going to take $980 less $890, and that will give us $90. So here we need to debit accounts payable $90. And then for cash, it's the same idea. We have a credit of $890. We need an ending balance of $980. That's a credit. So we need to add 90 to the 890 to get our 980. So the answer here is going to be D, debit accounts payable 90 and credit cash 90. For question 5, it says, Jones Co. purchased supplies on account in the amount of $2,500. The transaction was recorded with a debit to supplies $2,500 and a credit to cash for $2,500. The correcting entry for this transaction is debit cash $2,500 and credit accounts payable $2,500, debit cash $2,500 and credit accounts receivable $2,500, debit accounts payable $2,500 and credit cash $2,500, or debit accounts payable $2,500 and credit supplies $2,500. So just like the previous problems, I'm going to do my T accounts. And when I look at this, it says that the transaction was recorded with a debit to supplies. So I've got debit, supplies, $2,500. So we've got supplies. That's a debit. That's $2,500. And a credit to cash for the same amount. So we've got cash, $2,500. And now I'm going to look at that first sentence. They purchased supplies on account in the amount of $2,500. So my ending balance for supplies should be $2,500. Cash was not used in this transaction. So my ending balance for cash really should be 0. Since it's on account, that means that we're going to use accounts payable because we owe the money to a vendor, and that's a liability account. So we need to show that we owe, and here's accounts payable. So what we're going to do is put in the ending balance here of this $2,500. And now what we need to do is figure out how do we go from what was recorded to what should have been recorded. Well, our supplies is correct because we recorded a debit of $2,500 and we have a debit of $2,500. Accounts payable is incorrect because we didn't record anything and we need to have a credit of $2,500. So we need to credit accounts payable $2,500. That's part of our transaction. And we would do that by putting in this $2,500 here, and that gets us our ending balance of the $2,500. Cash should have a 0 balance, and in order to get cash a 0 balance, we need to debit cash $2,500. And the reason we do that is because we incorrectly credited cash $2,500. We need cash to be a 0 balance, so to correct that, we need to debit it $2,500. So we'll put in $2,500 here. So the journal entry for this one is going to be A, and that is a debit to cash $2,500 and a credit to accounts payable $2,500. For question 6, it says, Miller Co. purchased supplies on account in the amount of $3,400. This transaction was recorded with a debit to supplies $4,300 and a credit to cash $4,300. The correcting entry for this transaction is debit cash $3,400 and credit accounts receivable $3,400, debit cash $4,300 and credit accounts receivable $4,300, debit cash $4,300, credit accounts payable $900 and credit supplies $3,400, or debit cash $4,300, credit accounts payable $3,400 and credit supplies $900. So like on the previous problems, I'm going to go ahead and do the T account for what was actually recorded. And here they're saying that it was recorded as a debit to supplies for $4,300. So I've got supplies, and that's a debit, $4,300. And a credit to cash for $4,300. Again, this is what was recorded. So now what I want to do is put in the balance of what should have been recorded. So we purchased supplies on account in the amount of $3,400. So my ending balance here should be $3,400. Since it's on account, that means that we used accounts payable. So I've got my accounts payable here. And the ending balance of accounts payable should be this $3,400. This transaction, we shouldn't have recorded anything with cash. And as a result, then cash should be listed as 0. So now what we need to do is we need to figure out how to get from $4,300 as a debit to $3,400. And to do that, we need to take $4,300, reduce it by $3,400, and that's going to give us $900. So what we need to do then is we need to credit supplies $900. So we had a $4,300 debit less a $900 credit gives us an ending balance of a $3,400 debit. For cash, we need it to be 0. We have a credit amount of $4,300, and so we need to debit cash for $4,300 in order to get it to a 0 balance. So that's $4,300. And for accounts payable, we need a $3,400 balance, and we have no transactions, so we just need to add $3,400 as a credit. So the journal entry here is going to be D. We're going to debit cash $4,300. We're going to credit accounts payable $3,400, and we're going to credit our supplies $900. Let me know in the comments if you have any questions about correcting journal entries, accounting errors, or these test prep questions. And let me know if this video is helpful for you. For question 7, it says, Dogco paid $5,300 for office equipment and accidentally recorded to shop equipment instead of office equipment. The correcting entry would include a debit to shop equipment, debit to office equipment, credit to office equipment, or credit to cash. So I'm going to do my T accounts. So my T accounts are going to be for cash. They paid cash of $5,300. And then they accidentally recorded it to shop equipment. So we have shop equipment, and that is going to be $5,300. So that's the initial transaction. And they should have recorded it to office equipment. So now we need to figure out our correcting entry. So I'm going to put in office equipment here. Office equipment is an asset, just like shop equipment. And to increase the balance of those, we need to debit them. So in this instance, we want to move it basically from shop equipment to office equipment. So by the time we're done with this transaction, shop equipment should have a 0 balance. And to do that, we need to credit it for $5,300. And when we do that, then we're going to move that $5,300 from shop equipment to office equipment. Well, if we credited shop equipment $5,300, then we would debit office equipment $5,300. So when we look through our answers, it has nothing to do with cash. We're going to credit office equipment. No, we need to debit office equipment. So it's going to be B. And we wouldn't debit shop equipment. We would actually credit shop equipment. So the answer there is B. For question 8, it says, Smallco received a payment on account in the amount of $4,300. This transaction was recorded with a debit to service revenue $3,400 and a credit to accounts receivable for $3,400. The correcting entry for this transaction is debit cash $3,400 and credit accounts receivable $3,400, debit cash $4,300 and credit accounts receivable $4,300, debit cash $3,400, debit accounts receivable $900 and credit service revenue $4,300, or debit cash $4,300, credit accounts receivable $900, and credit service revenue $3,400. So I'm going to go ahead and do my T accounts for what was actually recorded. And we had a debit to service revenue for $3,400. So I've got $3,400 for my service revenue. And I've got a credit to accounts receivable for the same amount. And then what should have happened is when we receive a payment, that means we receive cash. So I'm going to put cash here. So that's 4,300. And again, my ending balances represent what should have happened. So I've got my cash at 4,300 and we received the payment. The payment was on account. So that means that we're going to reduce our accounts receivable because the customer no longer owes us. The ending balance then of our account receivable, which represents what should have happened, is going to be 4,300. And that's a credit. Service revenue has nothing to do with this transaction, so the ending balance should be a 0, and that is a credit because the revenue account has a normal balance of a credit. So what we're going to do then is figure out how to get from $3,400 debit for service revenue to a $0 credit. Well, we're going to credit it for $3,400. Same thing with accounts receivable. How do we go from a $3,400 credit to a $4,300 credit? Well, I need to take $4,300 less $3,400, and that gives me $900. So we need to credit accounts receivable $900. And for cash, we didn't have any transaction with cash that we recorded, and we need to end up with a debit of $4,300. So I need to debit cash for $4,300. So based on this information, my answer is going to be D. We debit cash $4,300, credit accounts receivable $900, and credit service revenue for $3,400. For question 9, it says, Greenco purchased supplies on account in the amount of $4,300. This transaction was recorded with a debit to cash for $4,300 and a credit to supplies for $4,300. As a result of recording this transaction incorrectly, which of the following is true? Cash is overstated, accounts payable is overstated, and supplies is overstated. Cash is overstated, accounts payable is understated, and supplies is understated. Cash is overstated, accounts payable is overstated, and supplies is understated. Or cash is overstated, accounts payable is understated, and supplies is overstated. All right, so just like before, I'm going to do my T accounts for what was actually recorded. So we have a debit to cash for $4,300. And then we have a credit to supplies for $4,300. Now I'm going to populate the T account with ending balances of what actually should have happened. So when we purchase supplies, that's an asset account. We increase the balance of supplies or an asset account by debiting it. And that's going to be for the $4,300. So my ending balance is going to be a $4,300 debit balance. Cash had nothing to do with this transaction because it's on account. So that means that my cash really should be 0. And then I've got accounts payable because it says that we purchase supplies on account. So accounts payable, we didn't record anything for accounts payable, but the ending balance should be a credit balance of $4,300. I know that because accounts payable is a liability. When we increase a liability, we need to credit it. So they ask here, what is overstated or understated? And when we look at this, we know that our cash is overstated. And that's what they say in A, B, C, and D, so that doesn't really help us out. We know that our accounts payable here is actually understated. So we know that it's not going to be A, we know that it's not going to be C, so it's got to be B or D because our accounts payable is understated. And then we look at our supplies, and our supplies, again, it's an asset, and we recorded it as a credit, so that decreases the balance of our supplies account, and we should have recorded it as a debit, which would increase it. So that means that our supplies are understated. So it can't be D, which means it's got to be B. So the answer here is going to be B. Cash is overstated, accounts payable is understated, and supplies is understated. For question 10, it says, ABC Co. received payment in the amount of $2,300 for services to be performed in the future. This transaction was recorded with a debit to cash for $3,200 and a credit to accounts receivable $3,200. The correcting entry for this transaction is debit unearned service revenue $2,300, credit cash $900, and credit accounts receivable $1,400, debit unearned service revenue $3,200, credit cash $900, and credit accounts receivable $2,300, debit accounts receivable $2,300, debit cash $900, and credit unearned service revenue $3,200, or debit accounts receivable $3,200, credit cash $900, and credit unearned service revenue $2,300. So just like on all the other problems, I'm going to do T accounts. So I've got a debit to cash for $3,200. And then I've got a credit to accounts receivable for $3,200. So that's what was actually recorded. And then what actually happened is we received a payment in the amount of $2,300. So our cash should have an ending balance of $2,300. Cash is an asset. We increase the balance of cash by debiting it. So that's why we debit at $2,300. And then it says for services to be performed. So that's not accounts receivable. We're looking at an account called unearned service revenue. It's a liability account. So we've got unearned service revenue. And we should have credited that. Since it's a liability, we increase the balance of a liability account by crediting it. That should be $2,300. Accounts receivable has nothing to do with this transaction. So that should have a balance of 0. It's an asset account, so I'm going to put the 0 on the debit side because the normal balance of accounts receivable or any asset is a debit. And so now what we need to do is figure out how to get from point A to point B. So point A here with cash, $3,200 debit to a $2,300 debit. Well, we're going to take $3,200 less 23, and that's going to give me $900. So I need to credit cash for $900. For accounts receivable, I have a $3,200 credit and I need a 0 balance. So I'm going to debit accounts receivable for $3,200. And then for unearned service revenue, I have a $2,300 credit balance and I have no transactions. So I need to credit unearned service revenue for $2,300. So my journal entry is going to be D. And that's where I debit accounts receivable, $3,200, credit cash, $900, and credit unearned service revenue for the $2,300. That's it for this episode. Make sure you give this video a thumbs up if you liked it, ask questions or leave comments if you have them, subscribe to my channel for more financial accounting videos, and ring the bell to be notified when new videos come out. What questions do you have about accounting errors or correcting journal entries? Let me know in the comments below and I'll get them answered. Additionally, check out the link in the description for my website, PassAccountingClass.com. It's a great resource for accounting and non-accounting students that need to pass their accounting class. It has more videos on similar topics, a message board where you can ask me your questions, and discounted rates for one-on-one tutoring with me. I tutor students across the U.S. via web conferencing tools and help my students succeed. I'm here to help, so feel free to reach out if you have any questions. Thanks for watching.